We have gathered here to discuss a very fascinating topic, which is investing global versus Indian markets. So there are certain things which I will be covering in this presentation today, like what are the dynamics or what is the behavior of certain markets, as well as the entire backstory of our market, as well as few global markets. First question is that what are the dynamics of different markets? So let's just go back in the history where majority of the markets were formed, at what time they were formed. So as you can see on the screen that India, it is the Asia's oldest stock exchange, and you guys will be surprised to know that it was started by a group of brokers under a banyan tree in Bombay. And the market was established in 1875, but the stock National Stock Exchange, that is the NSE, came way later in 1992. And our main index, which is the Nifty 50 index, it was launched in 1996. So the journey from, you can see from 1875 till 1996, we have seen a lot of events during that time also. Going to talk about how the S&P 500 has its sectors weightages. As you can see, we all know that how US is a very tech heavy index, tech heavy country. You can see the entire IT constitutes about 35% of the entire index. And after that, it is the financials, which constitute about 14%. As you can see, the main reason why the market cap to GDP ratio is high in US is that first, that the retail participation is clearly very high when we compare to all the countries around. All the countries around the world. Secondly, the amount of real estate investment, that is only 2% in US. If we moving forward, if we see the comparison, we can see that in India or in China or Japan, the real estate investment is quite higher compared to USA.
I mean, when you say real estate investment, I'm guessing you're just talking about REITs.
Not just REITs, sir, but this data extremely shows that where the retail money goes. Not just the retail money, but how the people of USA thinks about the investment.
Nini, what I'm saying is that you're not talking about real estate investment, you're talking about investing in the real estate through the stock market.
Through the stock market. Yes, yes, correct, correct.
Because the real estate investment is around 35% of their total personal wealth.
Yes,
It is
yes. This
only
is a
investment through stocks that is not happening in real estate.
right, right, right.
Hmm.
This
So, Abhinav,
bifurcation.
one question.
Yeah.
My question is that if you're saying that real estate is only 2%, so that what I understood by this, that it means only 2% stocks constituent as belong to the real estate sector, right? That is
Exactly.
what you're
In
saying.
the in
Oh,
the S&P 500. Right, right.
oh, okay, got it, got it. Okay, continue.
Now, if we see the same bifurcation for China, you can see the Chinese index has 27% of financials and real estate. We have seen in the past that how the Evergrande uh, scam or the fraud was happened in China because of how the real estate companies were misusing the loans via the banks. Secondly, industrials, as someone in the audience mentioned that how their exports were higher, that is why their market cap is higher than the GDP. The GDP is higher than the market cap, sorry. So you can see in industrials, you can see it constitutes about 19% of their entire index. But also the real estate holds only 1%, and the IT, which was highest in the US, holds about 4%. Now the Cyprus sector, it constitutes about 87% of the financials, and the rest 7% is the consumer goods, and the IT only constitutes about 1%. So you guys will be surprised to know that the entire Cyprus country runs only through banks. There are 10 stocks listed in the entire index. Out of 7, are the banks which hold the majority of the weightages. And we have seen in the after the COVID rally also that how the banking stocks have rallied in Cyprus.
Any reason for the banking to rally after the COVID?
The main reason was that before when the Cyprus index was established, after a few years there was a huge scam or fraud in the Cyprus market. So that is
Mhm.
why all the banking stocks tanked because the banking stocks were somewhere connected to the fraud. So after many years, the banking stocks started outperforming. So that is why most of the listed stocks in the entire index is only finance stocks. Majority of the banks.
ठीक है, कंटिन्यू कंटिन्यू।
अच्छा अभिनव, इसको ऐसा हम बोल सकते हैं स्विस बैंक जैसा यहाँ पे काम होता है।
Not entirely, but हाँ कुछ लोग Cyprus they use Cyprus uh, as an
Is it
offshore.
a tax
Yeah,
haven also?
yeah, it's a tax haven also, just like Cayman Islands. But majority of the people use Cyprus as a offshore country to set up their offshore businesses. So that now I'll show you the drawdowns of each of the market. The only reason I have not mentioned China and Cyprus because of the same data issue. You guys know how private the entire China is about their data. So the data related to China and Cyprus was not really available. So that is why I've only taken four countries, that is USA, India, Japan, and UK. Now, if you see for the 2000 crash, which was the dot-com bubble, you can see the S&P 500 US ka index fell about 43%, more than 45%. Whereas for India, it fell by 53%. But the least impacted uh, market was the UK market, which only fell about 11%. Now, if I take into the consideration of another crash, which was a 2008 Lehman Brothers market, you guys will be surprised to know that US market fell about 58%, but the Indian markets fell about 65% during that time. Now, there was no clear reports by SEBI or by the NSE that why the Indian market fell more than the US market. But some speculation was there that the Indian market started buying bonds of the Lehman Brothers. So that is why our markets fell more than the US market, where the actual crash was happened. And again, the UK market was least impacted out of the four, which is close to 30%. Now the famous COVID crash. Again, again we can see how Indian markets were the most impacted. It fell about 41%. So what I'm surprised to know by each of the crash that whatever happens around the globe, why is India getting affected the most? So does anybody in the audience have any kind of thought about this question that market में world में कुछ भी होता है, why Indian markets are getting affected the most?
I think it's primarily because of the role of FDIs.
FDS, correct, right. To show you what were the returns of all these market for the last 5 years, 10 years, and 20 years CAGR. As you can see, Indian markets for the last 5 years has given roughly around 15.1% return. China, on the other hand, have given negative returns, but Cyprus has given
Hmm.
about 44% returns in the
एक मिनट।
last 5 years, 10 years. In 10 years CAGR, you can see that US has outperformed all the countries, but still Cyprus holds around 13% of CAGR for the last 10 years. Along with, it is almost the same as India. But the real game happens more in the longer term. Let's say in the 20-year horizon, we can see that India has outperformed all these countries, and India has given a total CAGR of 15% for the last 20 years, and Cyprus holds only about 8%, which is still more than Japan, China, and UK combined.
We will talk about the GDP of the emerging market. So for these 5 countries, China has the highest GDP, which is second largest GDP in the world. India is currently sitting at a $4.3 trillion economy. South Korea is $1.79 trillion GDP. Brazil is $2.13 trillion, and the Vietnam is $0.49 trillion, which is $490 billion. Right. And if I talk about their market capitalization of the emerging market, so similarly, China sitting is 11.87 trillion. As Abhinav also talked about these things, but I would like to, as I told you that India and China are the common in my list, but the 3 different countries out there is South Korea, Brazil, and Vietnam. They are sitting, their market capitalization is something like Vietnam, it is very low, which is $2.22 trillion. It means $220 billion. Brazil is sitting at $0.47 trillion. South Korea, $1.68 trillion. So over here, we can see that market cap to GDP ratio. If we talk about the market cap to GDP ratio of the emerging market out of these 5 countries, so India has the highest market cap to GDP ratio. You guys have generally see or like have seen on the our vision video that we usually talk about in the US economy. So basically, US market capitalization is near about to 60 trillion and their GDP is near about to 30 trillion. So for me, for understanding that US is a developed country, and according to this ratio, a developed country should, or I would not say that it is the only parameter to categorize the underdeveloped or developed or developing countries, but still I'm saying that the ratio should be around 2, at least 2. Right? Agree, guys? Do you agree with that part, or do you don't agree with this thing?
Agree.
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 Okay. So over here, if I say that out of this 5 market, my perspective for India is likely to very good and better. So according to me, Indian markets are quite capable enough to go with this ratio in near about upcoming time, which is near about to 2. The ratio should be 2 if considered as a developed country. Moving forward, I would like to put a first question over here, that what are the similarities between or among the all emerging market we have discussed today, that India, South Korea, Brazil, Vietnam, China. So first point is retail investor participation over here. What does it mean? So retail investor play a big role in trading volumes. So as you can see, that first chart is showing the participation of the retail of a population. In India, approximately near about 6% people invest in the stock market. In China, it is significantly higher, 15%. And the South Korea is the highest number, which is 30% over here, right? But Vietnam and Brazil are a very, very much low participation in case of retail in the stock market, which is 3% and the 1%. And another chart is also showing that retail share of market capitalization. Jitna bhi, what is the total market capitalization of the India, China, South Korea, Vietnam, and Brazil? And then the retail share of that much percent in their market capitalization. So in India, 26% of the market capitalization retail shares. In case of China, 65%, Korea, 64%, near about to same. But in case of Vietnam, it is 90%, and the Brazil is 10%. So question arises over here that why in the first part, that retail participation, why South Korea has a higher percentage participation. So I would like to focus on this part as well, that South Korea has had low interest rate for a long time period. Earlier, South Korea had a low
Nishan,
interest rate. Yes,
before you
Lakshmi.
move, ahead, can you please again explain the previous slide, the previous two charts, the second one exactly?
This one.
Yeah, retail share of market cap uh, by turnover. What
See,
this
okay,
is
okay,
about?
okay. Let's say market capitalization is something which is 4.2 trillion. So near about 26% participate in that part of retail. Again, I'm just trying to convey this message that why Vietnam has the higher retail participation in the turnover. Clear that less institutional trading. Vietnam's market is still young and shallow, with few large domestic institutional investors like pension fund, mutual fund, and the insurance companies. In itself, in the Vietnam economy or Vietnam country, that next is the diversification. Second, institutional participation from itself from the Vietnam is quite saturated. Basically, funds, ETFs, foreign institutions is very small compared to India, Korea, and the China. And the very interesting part that actively trading, even though only 3% of population invest in the market, who are very active traders, not passive traders. So basically, if we look at the portion that how many of you are actively trading or the passive investor, but in case of Vietnam, the active traders are the higher number of active traders out of these 3% of the population invest. And last is capping on the investment. So basically, Vietnam caps foreign ownership in many listed companies, especially banks, telecom, and the strategic sector. These discourages large foreign institutional investor from building heavy positions, leaving the market mostly retail traders.
Like it is not clear, when you say that 3% of Vietnam is invested in the market, right?
Yes, yes, sir.
We don't know. Does that mean that 3% of the population has demat accounts? Or does it mean that 3% of their personal wealth is invested in the stock market?
So basically, we should have a clear bifurcation की exactly क्या है, कितने active traders
Exactly.
invested in,
What
right?
exactly is that 3%? Where is that 3% coming from?
Okay, okay, okay.
Does that
Right, sir.
represent 3% of the personal wealth, or does it represent 3% of the population? Because if 3% of population is different from 3% of personal wealth, if it is, let's say, 7% of population with 3% of personal wealth.
Right, sir.
For example, if in Vietnam it is 80%, 80% of people have accounts,
Okay.
but only 3% of personal wealth is present in the stock market. But that 3% that is invested in the stock market represents 90% of the stock market value.
Yes.
So now, the story becomes even more interesting. Ki bhai, if the commitment to the stock market is so high,
Right.
why is the commitment only coming from certain sector of the population? Yeah, I think let me tell the story differently. Suppose only 3% of the population invests in the market, right? But 90% of the personal wealth is invested in the market. That means the super rich are investing all their money in the stock market.
Exactly.
If only 3% are investing in the market, but those 3% own 80% of the market, that is telling you a different story. It is not just the story of the country investing in the market, it's only the super rich that are investing in the market.
Yeah, so sir, as you requested, what was the impact of the government in different markets? Pehla Indian markets, as I said earlier in the presentation also that our government owns majority of the PSUs, basically State Bank of India. In the example, I have also mentioned ONGC and LIC, which are the large part of our indices, that is Nifty 50. So we have seen that whenever there is a big announcement related to taxation or budget or even the election, we saw how the market crashed 10% on the day of results of the election. Here, the impact of government is moderate to high. Now, why it has been shifted to moderate to high? Because the only reason is that before the election, our home minister and prime minister both evidently said on the media channel that before the election result, go and buy the government stocks or the PSU stocks. So that is exactly why the impact of our government is really becoming high as of now, because they openly say in the in the media that XYZ stock or XYZ sector can rise after the election results. Similarly, if I have to take example of China, there obviously it is very high as there is no democracy there. But as I mentioned also in the previous slide, that how the retail participation is responsible for 70 to 80% of the total trading volume. So now here the government influence is very high, because the CSCR, which is also known as the SEBI of China, it directly halts trading during crashes. There have been multiple cases where the Chinese index or the Chinese market have been halted during the trading hours, and also they how the government influences the IPO, whichever IPO the company wants to bring to the market. The government has direct influence on those IPOs. So the government impact is high in the India and as well as China. Now let's talk about US. Anything that happens in the US has mostly indirect impact on the markets, apart from the tariffs and everything. But if I have to consider the Fed's monetary policy, which has the interest rates, its impact is huge. But the government, let's say the government bailout, which was during the 2008 crash or the 2020 pandemic, the SEC and CFFT ensured that all the trading remains really fair, and it don't interfere the stock prices like it interferes.
किसी के any final comments? Anybody wants to make any final comment? Indrajit, any final comments about the debate today? Was it different, similar to last times, or something new?
नहीं कुछ अलग है ये।
अच्छा,
और सपोज आगे जाके अगर इसमें अगर हम जैसे आज के इसमें हमने जैसे देखा कि यूएसए, जापान, इनका जो इंटरेस्ट रेट है वो बहुत कम है, उसके कारण उनकी जो पार्टिसिपेशन